Hello and welcome to the CNBC-TV18 Mumbai newsroom. I'm Ekta Batra and you're watching Your Stocks on CNBC-TV18. Well, joining us this afternoon is Shahina Mukadam, who's an independent market expert, and we have Vaishali Parekh, Head of Tech Research at Prabhudas, Lilladher, joining in to discuss all of your questions that you have this afternoon. Shahina as well as Vaishali, welcome to the show. Well, just wanted to, before we begin talking about a couple of these stock queries, just wanted to apprise our viewers in terms of what's taking place for the markets. It seems to be another day of consolidation, you would have to say, today with a negative bias. We have the Nifty, which is down around 42 odd points. The Bank Nifty is the one which is more worrisome, considering that there is an underperformance which has taken place for the Bank Nifty and is down around 382 odd points as we speak. Well, before we move forward, Vaishali, I just wanted your thoughts with regards to the Bank Nifty as well as the Nifty PSU Bank Index, considering that there is sluggishness which is taking place within both of these indices. And you haven't really seen that much of a recovery take place this, in the past couple of trading sessions. It's been a little choppy for the financials. What is your view? How would you approach it?
Very good afternoon. Yes, you rightly said that Bank Nifty actually has been very sluggish and we are seeing a corrective move. So even on an intraday basis, what I'm talking about is 43,300 holds as a crucial support level for today. If we see a close below that, it calls for a further selling pressure going towards perhaps 42,800. So, well, we are seeing some exhaustion coming in almost all banking stocks. IndusInd was holding on very well. We are seeing some profit booking emerging in that, and the PSU banking stocks also. But well, there is no damage to the trend. We may see some corrective move coming in all these stocks.
Okay, all right. Let's get in a query now. We have Pooja Jha, who writes to us from Patna. She holds 20 shares of Paytm at 900 odd rupees. She's making losses and asking whether she should book her losses or whether she should stay invested. So this is on Paytm. Currently, she's just about, her buy price was 900. The stock current market price is 917. So she wants to know whether she should exit or she should probably stay invested. Shahina, what would you recommend on this? Considering that she's almost break-even, do you think that will go places from here?
I think the stock will move in a consolidation phase for a couple of quarters. We've already seen a nice rally. And actually, I think, the profitability, it may move into profitability in a year's time. So a couple of quarters away. I think 2026 would be some year where it would be in profits. Numbers are improving. At the same time, I think we need to see what is the impact of the RBI tightening norms on provisions. So I would suggest that she's not making a loss, so she should exit and maybe look into a pure banking stock, which in my view, over the next couple of quarters will give better return.
Okay, all right. And Vaishali, would you have a view on Paytm?
Definitely. So actually, I would say there's nothing really happening right now at the moment. But since she's holding on, I would say continue holding, keeping a stop loss of 860. Because sometime back, we saw some momentum picking up. If we see the stock moving above 1,000 levels, it would change the view for the stock, and it would, in fact, it would confirm a strength in this particular stock, perhaps taking it to 1,200, 1,300 levels. So I would say not in a hurry, keep a stop loss of 860.
Okay, stop loss of 860 on Paytm. Well, let's get in another query now. We have Manjeet Kaur Soni, who is on the line from Chandigarh, and she has investments in Usha Martin. Hi, Manjeet.
Hello, good afternoon, ma'am.
Afternoon.
Yeah.
Tell us, Manjeet, what is your question?
Yeah. My query is regarding Usha Martin. The share was not doing well at all earlier. Now it has picked up. So my buy price is about 10 rupees. I mean, I'm a very long investor. Say about 5 decades, maybe this share I bought. So what do I do now at 327?
Okay, so but what is worrying you? The fact that
nothing is worrying me actually, because I've been holding on to this share for a very long time. So now since it has picked up, I just want to know whether I should continue to hold or sell it off.
Okay, interesting. Well, congratulations on being extremely patient and congratulations on the gains that you've seen in your investments in Usha Martin. So definitely, this is a clear definition of a long-term investor, 5 decades of holding on to that stock. But is it time to probably sell out? Shahina, I'm going to toss that over to you. What would you recommend to Manjeet?
I think it is a time to hold. I mean, though you've made a lot of money on the stock, I think you continue to hold because in the last couple of months, a lot of things have happened. Restructuring has happened, which has actually improved the balance sheet of the company. They sold off the steel plant to Tata Steel, have gotten, I think they were supposed to get about 3,500 crores. A large part of it would have come and has gone to repay debt. So if you see the debt now, it is considerably lower and the overall balance sheet quality has improved substantially. So I think, going forward, while the quarter numbers were not that interesting, I think going forward things will look better. And as you know, it is, one of the largest steel wire companies, manufacturers in the world. So I think continue to hold. It should give you better returns going forward.
Okay, all right. And technically, what would you recommend on this one, Vaishali? Would you have a view?
So technically also I would share the same view with China because the long-term trend has been great. I mean, it has been just a very smooth up move. And even now, if you see, I mean, after a good consolidation, the stock made a high of 360, 70 levels, and then it consolidated, taking a support, and it's back again in action. And I would say this is very likely to retest the 380 to 400 levels. So I would say, yes, it is a buy at every dip, in fact, and continue holding.
Okay, buy at every dip and continue holding. That's the view which is coming on Usha Martin. Let's get in another query now. We have Sumit Rani who writes to us from Mumbai. He holds 150 shares of Paytm again, which he's bought at around 250. He asks whether to hold. Oh, LIC. I think there's a typo there. It's LIC which he's bought, and he wants to know what to do, whether he should book his profits or exit at current levels. Well, what would you recommend on LIC, Vaishali?
I would say continue holding because not in a hurry. Why would you sell the stock right now? The stock is likely to do well in times to come. Well, the near-term trend is a bit weak, but we are close to the support levels, and I would say it can go to 680 levels.
Okay, it can go to 680 levels according to Vaishali, but fundamentally, what is your view on LIC, Shahina?
The fundamentals support the technical view actually, so I would agree that there is no hurry to sell. While the numbers have been really disappointing as we saw in the last quarter, and they are losing market share. At the same time, I think based on valuations and the size and the quality of LIC, an investor can continue to hold with a stop loss.
Okay, an investor can continue to hold with a stop loss. So that's the word coming in on LIC. Let's get in another question now, this time from the pharmaceutical space. Vishwa Rao writes to us from Tamil Nadu. He holds 10 shares of Cipla, which he's bought at 500 odd rupees. And he's a long-term investor and wants to know what to do, whether he should remain invested or exit. So again, sitting on a profit in this one. And definitely a lot of people managing to sit tight in terms of a lot of the stocks that they've invested in. So that really stands out to me in terms of the queries that we've got in the past couple of days. But Shahina, what would you recommend on Cipla? There's been so much to and fro with regards to the stake sale. There's possibly some, on the back burner, at least temporarily. So what would you recommend on Cipla? Do you think that there are many other cylinders which are firing for the company and there could be further upside?
Yeah, I think even the M&A activity, if it happens in Cipla, it's going to be a positive for the investors. That, gives you, that one reason gives you a, opportunity to continue to hold. Other than that, the actual financial performance is they're doing well. Operationally, they're doing well. We saw the last quarter, margins were higher. And also the management has actually guided margins will improve further. And we've seen a good growth in overall revenues. I believe that valuations also for Cipla are pretty attractive at current levels. I mean, they're not cheap, but they're reasonable. So I would recommend, it's a quality pharma company and one can continue to hold at current levels.
Okay, and do you think that there's further upside technically, Vaishali?
So yes, I would agree. Actually, just some time back there was some warning issued, and it was at a make or break situation at around 1240. But today, a move past 1260 brings in further conviction, and we are in fact recommending to our clients with a buy strategy, because a trading strategy with a positional trade, of course, we would be looking at a target of 1300, 1320. But there could be a damage to the trend if we go below 1220. So that is how this particular person should be making a view for this particular stock.
Okay, all right. So that's the view coming in on Cipla. That stock, like you can see, is rallied around 38 odd percent in the past 6 months. We need to take a short break on that note, but we'll answer a lot more queries on the other side. Stay tuned. Welcome back. You're still tuned into Your Stocks on CNBC TV18. We still have with us Shahina, Mukadam and Vaishali Parekh to answer all of your stock queries that you have. Let's get to another question then. We have Swati Chandra, who writes to us from Mumbai. She holds 50 shares of JSW Steel, which she's bought at around 400 odd rupees. So she's sitting on a good profit there, and she wants to know what to do with her investments. Well, it's seen a strong rally. So what would you recommend, here on, Vaishali? Do you think there's more to go for JSW Steel from these levels of over 700? And what would your target price be, stop loss be?
So I would say yes, actually the long-term trend is very much intact. And the stock had made a high in the recent past at around 820 levels. From there, we saw a dip coming to 720 levels. So right now, I would still maintain that yes, 720 to 800 is the consolidation phase, whereby there is going to be sideways move. But the minute we see the stock moving above 800, it could be ready for a target of 850 and 900 levels and so on. So, well, 720 should be the stop loss to be holding this stock, and I'm bullish on this for now.
Okay, all right. And what would you recommend on this fundamentally, Shahina?
Well, I agree. The first half has been pretty difficult for all steel companies because we saw a substantial fall in steel prices. Now they are stabilizing, and I think going forward we can see a bit of improvement in steel prices. I think even in the difficult times they managed to remain in profits. So I would recommend you continue to hold with a stop loss.
Okay, all right. Hold with the stop loss. That's the word coming in. Well, Deepak Dave now writes to us from Gandhinagar. He holds shares of Samvardhan Motherson, which he's bought at around 105. He's a long-term investor. Wants to know whether he should hold on or whether he should book his losses. He's sitting on a loss currently. Vaishali, do you think that there's more upside on Motherson and, it could probably get to his buy prices, or maybe he should average out?
I would say continue holding, because if he's held on for so long, I would say that yes, 85 acts as a very crucial support. And I don't think this stock would go below 85, 83 levels. And it makes sense to add at 83, 85 levels, because that would be helping him to lower his cost. And maybe we could see a bounce coming from there on to go towards 100 levels.
Okay, all right. And would you have a view with regards to any alternative in the space, Shahina? Maybe not Samvardhan Motherson, but any alternative also which you would want to recommend?
Yeah, I would think, the investor would be better off switching from Motherson, given that the numbers were very muted in second quarter, debt is going up, and I think they've taken some one-time losses which could even continue over the next couple of quarters. So I would recommend these switches. There are other stocks in, like for example, Apollo Tires. I think fundamentally also in terms of the balance sheet quality also it looks better. You can also switch to a pure, four-wheeler company like Tata Motors. I think these would be better, would give you a better return over the next couple of quarters.
Okay, all right. Let's get in another question now. We have Sujata who writes to us from Andhra Pradesh. She holds 200 shares of Apar Industries, which she's bought at around 303 rupees for the past 9 years, and 180 shares of BSE, which is bought at around 297 rupees per share for the past. She's holding on to this stock as well, which is Apar Industries as well as BSE. She's a long-term investor, wants to know what to do with both of these stocks. What would you recommend on this, Vaishali?
Bullish on this because, well, for now it is definitely consolidating, but we do still have a projected target of 6,400, 6,500, and for that it needs to cross the levels of 6,000. So right now it's in a consolidation phase, but keep holding on. And the other stock you asked me is BSC, right? So BSC has really moved on, and I think it's time to book partial profit because we've seen a one-way rally coming right from 550 to seeing a high of around 2,500 levels. So it is in for some profit booking. Partial profit booking should not be ruled out.
Okay, all right. And would you have a view on that, Shahina, in terms of BSE? Fundamentally, do you think that there's more which would support the stock?
I can't specifically comment on BSE because I have traded, in the last month. Of course, just generally talking for both the stocks, they both are excellent long-term investor stocks, and the investor can continue to hold both of them. At the same time, given that they have rallied a lot and valuations have started looking a bit expensive, one can look to do part profit booking, but they can remain in your portfolio for the long term.
Okay, all right. Remain in your portfolio for the long term. Well, let's get in another question now. We have Shankar who writes to us from Chennai. He holds 100 shares of Tejas Networks, which he's bought at around 313 on rupees, sitting on a massive profit there. He wants to know what to do, whether he should book his profits or stay invested. Well, what would you recommend on a larger scale, China? Because there are a lot of these people, a lot of investors who are sitting and have managed to hold on to their stocks which they have bought. They are sitting on good returns. Considering it's such a lively market, but it's run up quite significantly, what would you recommend in terms of a couple of these stocks which have seen such significant gains, and specifically on Tejas Networks?
Tejas is a Tata Group company, and it's a turnaround stock. So in terms of pure numbers, of course, one cannot, sort of put a valuation to it. At the same time, they have got some large order very recently last month, which has seen the stock, further rally. I think there's a lot happening and one can continue holding even at current levels.
Okay, and quickly, would you have a view, Vaishali, on Tejas Networks?
So I would say yes, the long-term trend is very, very intact. But well, we are seeing some correction coming in. So 760 holds as a crucial support. That is where one can add more to see the good round of momentum coming in from those levels.
Okay, all right, Vaishali as well as Shahina. Thanks very much for joining in and taking us through all of those questions. We need to wrap up on the show with the news that the mid-caps have managed to hold their head above the water. Much more resilient as compared to the Nifty, the Bank Nifty and the Sensex. The Bank Nifty currently down around 363 odd points. That's all the time that we have in the show. Do remember, you can always email us your queries and we will, as always, address them with our experts. Stay tuned. Closing bell up.